This conference will now be recorded.
I would really like to be, but I was one of the ones too that's been sick.
Yeah,
So
right.
that's why I missed class Thursday.
That was you and Jessica.
Yes, I know, shockingly. I'm like, we got sick at the same time.
But that's fine because uh, we started on this material and we'll go back on it again now. And of course, we'll have the session recorded for you to review. So
Okay.
let me see if I can share my screen. Everybody see my screen? You can adjust your screen. If you're having trouble, you can make it larger or smaller if you look at that. Okay.
Yep. hmm I can see it.
So the theory AJE uh, insert, the first part of that, we reviewed and we're there now that we were supposed to learn how to prepare an income statement, a statement of retained earnings, and a balance sheet. And by Wednesday, we'll be on the statement of cash flow. But that was our goal in the course, that you would be able to prepare the financial statements. Now, when we prepare for that statement, we need some rules. And so we have four organizations that give us the rules. First of all, the Securities and Exchange Commission. They're overall responsible for the rules that govern the preparation of financial statements. So everybody's preparing the financial statements the same way. The FASB has the uh, practitioners and educators, and they do most of the work for the SEC. Uh, and the SEC monitors to make sure that people are following what's called FASB, the Financial Accounting Standards. And if they don't, then they then will attempt to prosecute a company if it's not following uniform standards. We had issues with governmental entities going bankrupt, not for profits, hospitals, states, and cities. And so the Governmental Accounting Standards Board was created, the Governmental Accounting Standards Board, and they issued a statement for not for profits. Then we have the International Accounting Standards Board that's responsible to make sure that the standards are uniform worldwide. All companies are all operating worldwide. And so if you got an operation in the US and you have another one in the UK and you have one in France, you got to merge those operations together. You got to have uniform statements. You can't be using one set of rules in the UK and another set of rules in France and another set of rules in the US, and they're meaningful. And so, once again, we need uniform standards internationally. So, you should be familiar with the four bodies that set standards. Then there are 15 generally accepted accounting principles that you got to know, that you'll be tested on. Uh, the business as a single entity concept, that is, a business is separate from its owners. Okay. You don't run your business through your personal account. You have to get your business account. And, you should have covered a lot of this in uh, your legal environment course or your commercial law course. You can be a sole proprietor or a partnership. But most people are going to have a corporation, because when you operate as a sole proprietor or partnership, if something happens in the business, everything you own can be sued. But if it's a corporation, then only assets in the corporation can be sued for, and your personal assets are free from that. So that's just a key thing you need to know. Specific currency, most times everything's going to be in US dollars. That is, you can't be doing a statement and use the French franc and the British pound, and the US dollar. You need to use one currency for each. Time period, most times the balance sheet is as of a certain date at the end of 12 months, and the income statement is for a year. Historical costs, we're going to record things that cost. We're not going to change them because we think they've gone up in value. If you bought something for 100,000 land, and you might think it's worth 2 million, but you got to leave it at $100,000. You got to leave it as $100,000. Then we have the full disclosure principle. You got to fully disclose everything that's going on. We have the recognition principle in terms of revenues recognized when received. And we got the going concern concept. We're going to assume the business is in operation. Then we got this matching principle, which is going to work with adjusting interest. That matching principle is going to work. Whenever you recognize revenue, you got to match related expenses with it. Materiality, we skip small amounts. We don't go around and correct for everything. Conservative accounting is similar to historical costs. That is, we're always going to be conservative. We're not going to be trying to make statements look better than they are. Industry practices, constraint. Banks might have special rules. Insurance companies might have special rules. The energy sector may have special rules, but everybody in those sectors have to use the rules. Consistency, you got to use the same thing over each time. Excuse me just a second. Hello. Yeah, but I'm in class. All right, bye. Okay, objectivity. Everything has to be objective. We use accrual basis accounting. We recognize revenue when earned, and we record expenses when incurred. We don't go with that cash basis. And finally, we have the assessment of cash flow prospects. That's that final statement. Because we are on accrual basis, we do have to make sure that enough cash is available to pay the bills. And so that's the statement of cash flow. And that's the statement that we'll be on, say, around Wednesday. That's the statement we'll be on around Wednesday. Accounting cycle. We did step 1 and 2, analyze transaction and made journal entries. Then we did steps 3 and 4. We posted to the ledger and prepared a trial balance. Then we skipped to step 7 and 8 where we prepared the financial statements and closed the accounts. And we do that because sometimes people have trouble with adjusting interest. So we just want to get through the whole process. And now we're going to come back to look at steps 5 and 6, which is making adjusting interest. So we make these entries, we got to do a trial balance after these entries. With adjusting entries, their journal entries, they got a debit and a credit, and they got to be posted. Are there any questions? Are there any questions so far?
Not yet for me.
Okay. Let me check my email for a second to see if anybody's trying to get in. Most times I don't check it when I'm in class. So if you email me and I'm in class, but just in case, Outlook. Nobody. Okay. So let's look at adjusting interest. And we have to have adjusting entry. Look, this needs to ensure that the income statements and balance sheets have the right amounts on it. That is, if they're made so that we can ensure that items are at the correct amounts, and you'll see that in a few minutes. Uh, you'll see that in a few minutes. So look at this, and then we're going to go. Let's see. Typical type of adjusting interest. We're going to focus mainly on prepaid expenses and unrecorded revenue, and we'll do a little bit with accrued salaries. Okay. Let's look at these important rules for adjusting interest. When you make adjusting entries, cash is never involved in the adjusting entry. Okay. Now you may have a preceding entry that involved cash, but cash is never involved in the adjusting entry. Secondly, an adjusting entry always involves both an income statement account and a balance sheet account. It involves both an income statement account and a balance sheet account. So let's just see if we can go through here. And thought I'd try balance in here. Okay. So here's chart of accounts, and you got this in this handout. An adjusting entry is always going to involve one account on the left and one account on the right. It's going to always involve one account on the left and one account on the right. A balance sheet account and an income statement account, but not cash. It is not going, the adjusting entry is not going to have cash in it. So you may have had an entry before that that involved cash afterwards, but when you make that adjusting entry, I want you to make sure that cash is not in the adjusting entry. Let's see if we can go back to adjusting entries. And look at a simple example of adjusting entries. And I'm going to take, cut this out. So let's assume you bought supplies for cash for $2,000 and you bought supplies on account for $2,000. Okay. So you got $9,000 in supplies that you bought. Okay. But at the end of the year, you only got $3,000 in supplies. So right now on the books, there's 2,000 in supplies, and there's 7,000 in supplies, or $9,000. But during the year, the supplies have been used up. And so at the end of the year, you only got $3,000 in supplies. That's the balance in the account. We got to make an adjusting entry. We got to make an adjusting entry so that we can get supplies where they need to be. So we can get supplies where they need to be. So if we got 9,000 in supplies for what we bought, but there's only 3,000 there now, what's our adjusting entry going to be? What entry do we need to make to get these supplies where they need to be? If you had 9,000 in the bank at the beginning of the period, you got 3,000 in the bank at the end of the period, how much did you spend? $6,000. So if we had 9,000 in supplies at the beginning of the period and 3,000 at the end, then we got to make this adjusting entry, debiting supplies expense for 6,000 and crediting supplies for 6,000. If we don't make the entry, if we don't make the entry, then supplies will be overstated by 9,000 and the supplies expense will be understated by 6,000. So your financial statements would not be correct. Are there any questions now? Okay. Pull up your spreadsheet now. See if you can pull up the spreadsheet, the AJE spreadsheet that I just put in course content. So I want you to pull up the AJE spreadsheet that I put in course content. And it's going to look like this. Does everybody have the spreadsheet pulled up? You should entitle the spreadsheet AJE1 for your last name, AJE1. So entitle the spreadsheet AJE1 with your last name, AJE1. So when you send it to me as a quiz, by the time class is over, I'll be able to get it from you. Does everybody have a spreadsheet up? Anybody don't have a spreadsheet up? Okay, so let's make,
I don't.
say what?
I don't have it up.
Can you get it up, Miss Beyonce?
Wait, which one is it?
You go to course content and you go to adjusting entries. And there's a spreadsheet in there called AJE Accounting Integrated Excel Spreadsheet. I want you to pull up that spreadsheet. You have it now.
Got it.
All right. I want you all to make the first 4 journal entries and post them to the ledger. You see these journal entries over here? Make these first 4 journal entries, 1, 2, 3, 5 journal entries, and post them to the ledger. Can you do that?
Maybe, maybe not.
Well, then
So
you,
are you saying from the invested all the way through rent expense?
right. I want you to make those
Okay.
5. You
Okay.
just sent me some homework in, Beyonce, saying you could do this.
I know, but still.
Still what? Make me 1, 2, 3, 4, 5 journal entries, 2 minutes per journal entry, and post it to the ledger. What's the first journal entry, Beyonce?
Professor, you was not finna single me out and do that.
Gave the first one, which is the easiest one, which is the one we do all the
Mhm.
time.
I know.
And I got the accounts on the spreadsheet. Just debit cash for 100,000. Credit what? common stock for 100,000. Then you want to post that to the key account.
Who is that typing?
Then we purchase some supplies for $8,000. And let's assume we paid cash. So purchase supplies.
Can we mute our microphones when we not talking?
Okay.
Okay, I'm lost
Why are you lost?
because I can't see your screen and I just opened it, but I don't know where I'm getting this information from.
Okay. Can everybody else see my screen?
It's like very zoomed in.
Okay, you can expand your view of this.
How do I do that?
If you look at the bottom right corner, it says fit. That's what allows you to zoom in or zoom out of whatever he's sharing.
I think it's because I'm doing it on my phone. I don't really see where it says fit. Okay,
Oh,
I
I
see
don't
it
know.
now. I see your
See
screen
it
now.
now? Okay. So just make these first four journal entries. I mean, five journal entries. So we purchase supplies, paying cash, and post them to the ledger.
Why did you put the 8,000 under cash flow statement location?
I didn't mean to do that. Just
Oh,
I was trying to get it larger. See it better now? So we post that one. Debit, credit, cash. Everybody have that done?
Yes.
Okay. So let's look at accounts. We have the permanent accounts up top. These are the accounts that always stay there. Then we have the temporary accounts, what? At the bottom. We always close all of these accounts out. And our adjusting entry is always going to involve a permanent account and a temporary account. Now, if you look at this company right now, just with these transactions, what's its net income? Can you determine its net income?
Mm, um, 150,000.
Right, we got sales of 200,000 minus salaries minus rent, so it's 150,000. Okay. Okay, but then we go back to our journal entries, and let's look at this last journal entry down here. Ending supplies 3,000. Okay, so you see this ending supplies 3,000. If we ignore that and we go back to these T accounts, what's the problem? That is, we only got $3,000 in supplies, but we got it on the books at 8,000. How would that impact your calculation of net income?
Then it would increase your income, right? Since we're only utilizing 3,000 as opposed to 8.
I wouldn't say that.
It wouldn't? Okay.
Every time, especially when we buy these assets up here, like the supplies, when we buy them, they're an asset, but they're always utilized. And when they're utilized, they're gonna come down here as an expense, so that we no longer gonna have 150,000. If we leave the supplies like this, and so whenever you buy an asset, eventually it turns into an expense to reduce your revenue. So first of all, you're only buying those assets if they worth something, if they're going to be of value in producing the revenue, because eventually you're going to have to subtract them from that revenue. Now, if my supplies is 8,000, well, can you all do me a trial balance at this point? So suppose we just stop here and I tell you to do me a trial balance. So what does your trial balance look like at this point? This is our trial balance here.
Mm-hmm. It balances 300,000.
Okay. And so we knew we were doing the income statement. We do what? Put sales here. We bring over our salaries and rent. So right now, net income is 150,000. Did everyone see that?
Yep.
But we only have $3,000 in supplies. Okay. So we need to make an adjusting entry. Let's go back to our journal entries. So we bought 8,000 and we only got 3,000. We're gonna make an adjusting entry. Crediting supplies. What's the amount? Debit supplies. So let's see what happens when we make this entry. When we make this entry, because even though we had 8,000 in supplies, we now only have 3,000. So we got to go back to our trial balance now. Excuse me, our T accounts. And we're going to credit supplies for 5,000. We're going to debit supplies expense for 5,000.
Can you go back to the trial balance page real quick?
We're getting ready to go there. And so now your supplies has a balance of what? $3,000 in it.
So I'm sorry. So you on the journal entries, you added that specific entry before you brought it over to the T account?
Yeah, can't
You put it
forget.
over there?
You got to have a journal entry first.
Okay.
That's the adjusting entry. Then we're
So
going
it
to
was
put
a
it in the accounts.
so we credited supplies and we credited supplies expense and we
We
debit
debit, we debit the supplies expense.
and credited supplies.
Right.
Okay.
Remember, supplies is an asset,
Okay.
and it had 8,000 in it, and now it's down to 3. So when we go to the trial balance now, what's going to be the case? Supplies is going to be what now?
Now it's
Now,
gonna
now we got supplies expense. of what?
5,000.
So you can see we still in balance. But now we're going to copy the supplies expense. Let me put this expense in here. And put a formula here. So this is going to equal sales minus equals. I'm going to put that in there. Bring it on down to the gross profit. Somehow it's not letting me put a formula in. So, but we know I don't know why it does that. Okay. But the bottom line is what? Instead of the net income being 150, it's going to be what? 145. So what the adjusting entry does is to record certain expenses that have not been recorded. If we don't make the adjusting entry, we would be showing too much income. We would have had 150,000.
Mm-hmm.
So that's what an adjusting entry does. If you don't make the adjusting entry, and you keep supplies up here at $8,000, your balance sheet is going to be off because you got too much in supplies. And your net income is going to be understated because you didn't record that expense. So we said that adjusting entries are internal journal entries. These first set of journal entries were external journal entries that we made with someone, with shareholders. We bought some supplies. We sold some things. We got a salary. We paid salaries. We paid rent. But this is an internal entry because we used up these supplies we bought. We make this internal entry, debiting supplies and crediting supplies expense. Any questions?
Okay, can you go back to, okay, so you put it in a journal entry. So how does that come out in the T accounts? Oh, never
Anytime,
mind, I see it.
yeah, anytime you make a journal entry, you got to post it.
And then, okay, so, okay, let me just catch up real quick.
So it's still a transaction type 9, right? Right? Is it 9?
No, no, there's
Supplies.
no cash involved in the adjusting entry. So
Oh,
keep,
because we don't use it.
yeah, keep
Okay.
it in mind.
Okay. Okay. Got it.
Look
Okay.
at your types though, since you brought up types. What type is it?
Um,
13.
13.
What kind?
type.
13.
I think it's a 13, where we record the utilization of an asset. We had it in here, we use it, and so that's where that entry comes in. Any other questions on these adjusting entries?
I have questions, but can I just wait until tomorrow when we're in class?
Okay, that'll be fine.
So that means we are going on campus tomorrow.
Yeah, I think
That's
it's
all I
easier.
heard.
It's
I'm like,
easier for me in person.
mm,
Yeah, and with this group, they don't show up. I guess they
online or in class. But I mean, here we are.
no, they get there in class, uh, but they don't show up online.
Some people still trying to figure out how to get on. So
But I asked them to come on early and then email me. But why don't y'all get in y'all group me and see if you can help them out for the day? I mean, you all got on, so help them get on. So I just tried to give everybody a break, let you save some gas and everything. We'll be there tomorrow. But let me just say that, yeah, only half the people have gone back to work downtown in Houston. Okay, only half the people. So half of you all are going to work virtually, and the other half might not. Or sometimes people go in partially. You're going to have to learn how to operate virtually. Okay, that's just the way things have changed. And so certainly, we're going to get back to campus and things like that. But on a personal note, you got to learn how to operate both ways if you're going to have that executive type of job that you're being trained for. If you don't have that kind of job, you got to be able to work both ways. Training sessions. A lot of the training now is virtual like this. They aren't flying people to meetings all over the world. So you just have to learn how to do it. So we've made this adjusting entry for supplies. We've made the adjusting entry for supplies. And prior to making the adjusting entry, we didn't have a supplies expense. And when that's the case, when we don't have a supplies expense, then the income statement is incorrect. So we made that entry debiting supplies expense and crediting supplies. So that now, instead of supplies going on the balance at 8,000, it's coming on at 3,000. And instead of the net income being 150, the net income is now 145. Okay. So this is what adjusting entries do. The internal entries, they got to correct the accounts, which if they're not corrected, don't have a trial balance and the related income statement and balance sheet incorrect. All right, so let's go back and see if we can make another adjusting entry. Uh, We'll go down to the bottom. It's a good one for Beyonce here.
So for the adjusting entries, a transaction type is we wouldn't be listing. I because I noticed you didn't put, even though we talked about it, I noticed you didn't put it on
I can put
yours.
it down because I'm just, well, I've been
Okay.
saying you all to put it down. I just didn't put it down.
Okay. I just wanted to confirm. Okay.
But I expect that you all will have the transaction type down. And they're there. Remember, you got all of those 20 something other transactions?
Yeah.
They're there.
Okay.
Let's go down to this transaction. Uh, let's see where it is. Okay, we received cash in advance for 1,000 pairs of shoes at $50 each. Cash in advance for 1,000 pairs of shoes at $50 each. What is our transaction type? What is our transaction type?
Is it for
What does four say?
income received in advance?
That's correct. So how much income did we receive in advance? Well, let's, before we go there, what account do we debit? What account are we going to debit?
Cash.
What account are we going to credit?
Um, unearned income.
We're going to credit unearned income. And what kind of an account is unearned income?
Mm, it is.
Liabilities?
Yes, it is.
So how much money did we get in advance from our 1,000 custom paying $50 each? Is that $50,000?
Yes.
So that's a new transaction for us. But if you're running a company, you like this transaction, right?
Yes.
You got
Definitely.
cash of 50,000 and unearned income of 50,000.
Hmm.
With any journal entry, we're gonna post it. So go to our T accounts. We're gonna debit cash for 50,000, and we're gonna credit unearned income for 50,000. Okay. Any questions? Update your trial balance now. Update your trial balance. Everybody had their trial balances updated.
Yes.
Now, let's go back to our journal entries, and it says 900 pairs of shoes were picked up by customers. 900 pairs of shoes were picked up by customers. What's going to happen if we don't make this journal entry? Well, what is the journal entry? What's our journal entry type? Look down near the bottom.
Okay.
So what?
I don't know. That's what I
Look
was saying to myself as I was reading it.
look at your journal entries at the bottom. Journal entry types.
21.
What does 21 say?
Completion of earning process for income received in advance.
Completion of the earning process for income received in advance. So this is 21. Are we going to debit?
Unearned income
So we're going to debit unearned income.
and credit revenue.
Debit unearned income, and that's 900 customers. So that's what, 45,000? So what would happen if we didn't make this entry? Like our T accounts. Sales would not be at the right level. Sales are because we've earned the income. And so when you've earned the income, you want to show that in sales. And now we can come up here to the unearned account. We're debited for 45,000. So the balance in the account is 5,000. And so as we come to the trial balance, we no longer have 50,000 in unearned income. We've done the work and we've earned the money. So this account goes to what? $5,000. Sales comes to what? 245.
Mm-hmm.
So now we got what? 245 here. We got 245 here. Let me clear the content. What was I thinking? Equal. I think I was putting parentheses before the equal sign. So you see what's happening now with your, if you don't make the adjusting entry, you would have kept your revenue at 200,000 when it was 245. So that's why we have to make these internal journal entries. Any questions? Those lovely internal journal entries. So hopefully you see now why I skipped them.
Can you go back real quick, just for a second?
Well, you want me to go back to,
The trial balance sheet.
let me go back to the trial balance sheet. Okay, here we are. And the difference with these entries, is that
Okay, I got it.
All right. I'm not giving you the dollar amount. You got to do some calculation. So whereas before you always knew, now you got to do some calculation. So we're going to take a brief break, but on your break, let's see, this is transaction 1, 2, 3, 4, 5. Coming out of your break, go ahead and make journal entries 6 and 7 and post to the ledger. We purchased a 12-month insurance policy, and we purchased an auto for $40,000. So I want you to go ahead and make those journal entries, and then we'll make a couple of more adjusting entries.
I'm sorry, you said do purchase auto for 40,000?
Yeah, and purchase a 12-month insurance policy for $4,000. So
Okay.
these, see, they're there.
Okay.
So as you think about this, I just want you to.
This
Any
conference
questions?
will now be recorded.
Are there any questions? Did y'all buy these? Make these other two purchases for me.
What's the auto? Are we using cash for auto, or are we using the account?
Uh, let's just put it on a note payable.
Notes payable. Okay.
So we buy the insurance policy on April 1st for $4,000. So we debit prepaid insurance, credit cash, $4,000, and for the auto, we just put it on a full note. So we're gonna debit auto and credit note payable, 40,000. Okay, so let's go ahead and post these. So we got prepaid insurance for 4,000 and auto for 40,000. So once again, we have some accounts. See, we need to credit cash for 4,000. need to credit long-term note for 40,000. So on the prepaid insurance, let's go back to that journal entry. We bought it on April 1 for $4,000. So on December 31st, what's going to be the case if we bought it on April 1 for $4,000? When we get to December 31st, we're going to say, okay, we have 4,000. Hello? Yeah. So we purchased this policy for $4,000. It's a 12-month policy. So how's this policy expiring? If it's $4,000, we're going to divide it by 12, and that's going to equal what?
3,000. 3,000.
Well, their monthly amount is what? 333.33. So it's expiring at the rate of 333 per month. And so from April to December is how many months?
8.
It's 8 months.
Well, technically, it expires on April 1st,
We
right?
bought it, yeah, we bought it on April 1st. So how many
Okay.
months from April 1st to December 31st?
So that's 9 months then.
Okay, so we have 9 months times 333.33. So how much is that? Is that 3,000?
Yep, 2999.97. It's gonna be $3,000.
Okay. So we no longer have $4,000 worth of insurance. We got what? $3,000. So we're gonna make an entry debiting insurance expense.
Wait, what was the calculation that you just did? I think I missed a beat.
Thing. Uh, our insurance is expiring at the rate of 330, 333.33 a month. Okay, that's how it's expiring. So this asset at the end of the year on December 31st is no
Mm-hmm.
longer worth $4,000. So
Mm-hmm.
when we go to the T accounts, prepaid insurance is $4,000. But just like the supplies, by the end of the year, 9 months has been used up.
Okay.
So we need to credit prepaid insurance for 3,000 and debit what? Insurance expense for 3,000. So our journal entry, debit insurance expense for 3,000 and credit prepaid insurance. $3,000.
Uh, okay. I'm there. I'm up to speed now. I see your point. Gotcha. Okay.
So once again, you see, you run a business. When you run a business, you can't just go around buying stuff because eventually you have to write these off, and they're going to become expenses, and you're going to need some revenue to cover. Now we know about automobiles, right? What happens when you drive them off the lot?
Depreciation begins.
Right. Soon as you drive it off the lot. So if you have an auto that costs $40,000 and has a 4-year life, then what's happening each year? It's going down in value by $10,000 a year.
Mhm. Yep.
So notice our entry here. We're going to debit depreciation expense auto. And we're going to credit an account called accumulated depreciation. So we debit the depreciation expense, we credit and accumulate depreciation. Uh, each year we're going to write off $10,000. So we're going to debit depreciation expense for 10,000, and we're going to credit accumulate depreciation for 10,000. Let's go to our T accounts. When we have long-lived assets, we always want to know what they cost. And so we will post the depreciation expense 10,000, but we're going to credit accumulated depreciation for 10,000. And these two accounts go together. They go together. So we're always going to know what it originally cost, and we're going to know what the depreciation is on. Okay. So you can imagine once we make the adjusted entry, what? Something is happening to the trial balance and to the income statement. Let's see, we could do one more. Accrued salaries. At the end of the year, our workers work 3 days and we pay $2,000 a day. If December 31st comes on a Wednesday, so they've worked 3 days, we aren't going to pay them. We won't pay them to January, okay? We won't pay them to January. But we still owe them $6,000, $2,000 a day. So we got to make an entry debiting salary expense. So we got to make an entry debiting salary expense. for 3 days at $2,000 a day, $6,000. And we're going to credit accounts wages payable. We owe the workers, they've worked, we got to get them on the books that year. So when we post these T accounts, salary expense gets another 6,000. Okay. And we will I'll make the short-term note wages payable. So those are adjusting entries. Those are adjusting entries. They're entries that are made typically at the end of the year. They're internal journal entries. We don't know the amounts, but uh, if we don't make those entries, you can see right away what? What would you see? If we do not make those entries,
That net income would be incorrect.
oh, your net income would be incorrect. So after these next set of entries, I want you all to go ahead and do the trial balance and do my new income statement and a balance sheet. So you got those last few entries, post them to the
On
ledger.
on the wages payable, is that on the salaries payable on 302?
Yeah, wages payable, salary payable, same thing.
That's gonna be the same thing. Okay, I just wanted to make sure.
That's fine, yeah. Sometimes I call it wages, sometimes salaries payable. So if it's
Hmm.
salaries, so what I want you to do is to now redo this trial balance. Redo the trial balance, those last few entries. Then look at your new income statement and your balance sheet. And I guess you might as well practice on closing entries.
Hmm.
Are there any questions? So on campus tomorrow,
Why'd you look at me when you said it?
everybody
All right, I
learning.
have a question. Wait, I have a question. So for the insurance expense and prepaid expense, we use it's going to be a type 13.
Yeah, same thing, right?
Yeah.
Okay, and 14 for the depreciation. Correct.
Correct. 14 for the
Mhm.
depreciation.
Gotcha. All right,
What about those wages payable?
that's going to be 20. Correct.
What? Isn't it
Go,
hard?
Jessica, go.
Hey, I reads. Okay, I reads.
Me too. Reading is fundamental. Me too. Okay. Okay.
So, uh, Starworth is still with us. So the A students have to be able to do all of these. C students just got to be able to do two: supplies and unearned income. That's all the C students got to be able to do. Y'all just got two: supplies. C and B students and unearned income. But the A students who are going to exempt the final, they don't have to do that. See, so, but well, you don't quite exempt it. Your final is those 73 journal entries. So your final is those 73 journal entries. So you can begin working on it as we pull the rest of these things together. As we pull the rest of these things together. So at this point, go through everybody, finished up, update this trial balance, and then redo your income statements and balance sheet, and we'll look at that. And then we have those homework problems that I have that are due tomorrow at 2, correct? You have adjusting journal entry homework problems that are in assignments that I moved to tomorrow. So you need to begin to work on those.
And those are just what we did today, just finishing off, putting trial balance and doing the balance statement and everything, right? And the closing entries.
Say that again.
And you said when you say the journal entries, the adjusting journal entries is what we did today. Just finish
Right.
off and then make sure we put the T accounts, trial balance, and the closing entries and everything.
Correct.
Got you.
And
So
you'll turn
this,
that in for 10 points. You'll turn that in for 10 points.
so so you're saying what we're finishing right now, this is that assignment? Is that AJE homework
Mm-mm.
assignment that you
Nope.
already have?
Nope.
Which one
This
is this one? What is this one listed as?
I just created it. I hadn't
Oh,
put it
just now?
yet.
Okay, let me refresh then. But the one that I see that says,
It's
there's
telling you,
another one in here. I think that's the one for tomorrow. That one doesn't have a document. It's in there. Like
does
a
it have numbers?
no, it doesn't have anything. It's just the link.
I have to look at it. They're just some journal entries. I'll get that to you all. They're
Okay.
journal entries that in the handout. There's some journal entries I had that I wanted you all to work.
Okay.
So they're just short ones, so you're going through. So what I tried to do today was to look at this in total so you see how they fit in. So if we just looked at supplies by itself and you didn't see these other things, you might have trouble seeing how it would fit in. Let's see, adjusting journal entry.
On the homework that was due yesterday on the JHJ rental car midterm, we
Correct.
were supposed to do the 40, correct?
Yeah, y'all were doing the 40 on that one.
Okay. I did
Woo.
45 just in case because I wasn't sure.
Doesn't matter.
Sorry.
Doesn't matter. So you balance and everything so we can finish up. So that was the last part of period 2 in the midterm period.
Okay.
But, yeah, I'll get those in there. Those are just short ones, so you just got a little short problem, but I wanted to give you the context of how those problems would go. You can always use the spreadsheet and work on it however you want to work on them. But a lot of time it's better to see them in the context of everything. So I'll see if I can find my sheets. But we will finish adjusting journal entries tomorrow. And like I say, it's limited what, in terms of who has to do which ones. But we'll get that straight. And then after we get that straight, we move on to the statement of cash flow and then to inventories.
Okay.
Business that has inventories. So let's keep pushing and try to endure to the end.
Okie dokie.
And
Okay, so what's due tomorrow? You gonna post it by today so we
It
can do it?
hasn't posted yet.
yeah, it's
Okay,
about 10. I thought I'd put it in there. Thought I'd put them in there, but evidently I didn't. So I'll go
yeah,
through
because it's
Yeah, because we only have one link right now. There's one link, and that's the one that shows due tomorrow, but it doesn't have a document attached to it. So that's why I was asking. That's probably what Jessica's saying too. For this one,
right.
we don't
Yeah,
have a different submission link in there right now.
I'm gonna put in the submission link for the AJ for this one.
Okay.
So
Okay.
this one will be put in. So we did most of the work. So it's just a review in
Okay.
terms of doing the trial balance, and hopefully you get a perspective. Because as you work on them separately by themselves, you got to understand the whole context.
Okay.
So you all have a good one. Don't get wet out there today.
Okay.
Enjoy looking at the rain. Maybe it will cool off a little bit.
hopefully so.
Me too. I don't know. I felt the same way. Okay. See you
Jasmine,
guys tomorrow.
You've been quiet all day.
I'm trying to catch up. I'm
You,
trying to understand how to do this, but I think it'll just be better tomorrow for me.
but well, I skipped it for a reason. I skipped it for a reason because
Yeah.
I did this and had you do the financials. You could see. So just kept it simple. And now we just bring this, just add another piece in, which is what we do. So you all have a good one, and we will see you all at 1 o'clock tomorrow.
Okay.
All
See you
right.
tomorrow.
All right.
Have a good day.
You all too. Bye.
Bye.